Hello, very good dear subscribers, and welcome to a new video on the channel. Today we have the special monthly video reviewing my portfolio starting from €0 with you. Get ready to discover my new year investment. As always, first I would like to analyze a little about the evolution of the YouTube channel and how I see it in a couple of months. As you can see, the evolution during this last month has been like a roller coaster. With large peaks in the number of views and new subscribers, but also with drops for a couple of days, I still consider that the evolution continues to be growing and positive. Unfortunately, this month we have not surpassed the goal of reaching 700. But even so, we have remained very close. For this month, the goal will be to reach 750 subscribers and stay closer to 1,000 subscribers. The evolution of the investment made in December has been so good. Vici properties have grown almost 4%, however, Comcast continues at a low price and I lost around 9%. Despite this, since I started investing, my portfolio has grown by around 3%. Remember that this is a very long-term investment, and that the objective is not to obtain a high return in the short term. So this large drop of Comcast does not worry me too much, since I fully trust my estimates of the intrinsic value of Comcast. The good news is that during this month we have received dividends. Specifically 42 cents from Texas Roadhouse, or what is equal to 46 cents. Moving on, I currently have 23 stocks from different sectors on my watch list, but for today's video we will only focus on those that are below my estimate of their intrinsic value. Because remember, you always have to buy low and sell high, and not the other way around. As simple as it may seem, most investors lose their money by not following this advice and selling their shares when the price has already fallen, and panic and buying them when everyone is talking about them and the price is overbought. Additionally, we will not consider companies in the consumer discretionary, communication services, technology and REIT sectors to diversify our portfolio and reduce risk. This month, I introduced new companies and sectors to this watch list with new intrinsic values for me. So we will go on to analyze in-depth companies such as Abbott Laboratories, Bristol Myers, CVS Health Corporation and NextEra Energy, since they are 4 companies that have an upcoming ex-dividend, and some of them will allow us to receive dividends this month again. In order to better evaluate each section that we are analyzing, I have decided to create a Google Sheets table in which we will place the score obtained by each company, like the previous months. Let's start by checking the dividend safety. All 4 companies show decent results, although BMW's is slightly lower due to huge drop in market price during the last year. I believe that its dividend is also healthy. Continuing with the dividend growth of recent years, the panorama changes quite a bit since Bristol Myers has had a growth of 7%, CVS is somewhat lower at around 2%, and the best stocks are NextEra Energy and Abbott Laboratories, both with 12%. Finally, we see how the 4 companies have different dividend yields, CVS and NextEra Energy close to 3%, Bristol Myers Squibb higher at around 4.6%, and Abbott, which is lower at 2%. Regarding the evolution of income, earnings and free cash flow, the best company is Bristol Myers, while NextEra Energy has obtained the worst values due to its negative free cash flow during the last 10 years, compensated with a decent growth in revenue and earnings. As we can see in the following picture, Abbott is gradually moving away from the other 3 companies in terms of score. The price/earnings ratio is a good indicator to check whether a company is undervalued or overvalued, in addition to our fair value analysis. Only CVS Health is close to the 5-year average price-to-earnings ratio, while the other 3 are below them, indicating an undervaluation of their respective prices. Impressive, right? Moving on to yield on cost, here NextEra Energy is the clear winner with over 10% compound annual growth rate over the last 10 years. On the other hand, Abbott Laboratories have a yield on cost growth close to 10%, while the other 2 companies barely manage to reach between 2% growth. Finally, we will see the total return that each stock has offered over the last 5 years. with two companies, NextEra Energy and Abbott Laboratories, have managed to exceed the 60% that marks that 10% annual profitability as you see in the graph. However, CVS and Bristol Myers have achieved a total return during the last 5 years of around 30%. Once we have all the values of the scores obtained, what I will do is multiply the average of all the sections by the score obtained in terms of dividend safety in order to more efficiently adjust the results to its security. Well, as you can see, NextEra Energy is the one that has obtained the highest score, and Abbott Laboratories. Well, as you can see, NextEra Energy is the one that has obtained the highest score, and Abbott Laboratories have been very close, so it will be a company to take into account in the future. However, over the last 2 months it has grown almost 10%, which has caused its score to drop slightly, and has not been as great an entry point as the $93 per share it was trading at in November. As a result, NextEra Energy will be our first pick of 2024. Then we enter the scalable broker and carry out the operation, looking for the NE ticker. Remember that I will always try to make a purchase of around €100 so that the commission is less than 1%. So introducing 2 shares we would make an investment of 112.96, so adding the commission of 99 cents, the investment amounts to €113.95. I would like to emphasize that I made the purchase on December 3rd. Well, we go on to write down the purchase made in our Google spreadsheet. We place the ticker in the first column, 2 shares, and at the price of 113.95 divided by 2, and then we multiply it by the euro/dollar exchange rate to a total of $62.38. We added it in the utilities sector, and as you can see, this investment will allow us to reinvest 0.06 shares annually via dividends. As we are already in the month of January, I will move on to the monthly value sheet, and in the month of January 2024 we will write the €662.65 that our investments are currently worth in the market. And also, as we embark on a new year, I will go to the annual value, and at the end of 2023 we will write the same value. In pursuit of financial growth and portfolio diversification, I have established 4 key milestones for my investment strategy. First and foremost, I am committed to consistently investing a minimum of $100 per month, with the goal of reaching a total investment of $2,000 by the end of 2024. To maximize long-term returns, I have chosen to exclusively invest in dividend growth stocks that I believe possess the potential for sustained growth over a minimum of 20 years. Additionally, I am implementing a well-rounded diversification strategy by ensuring representation from each sector in my portfolio, featuring a total of 15 carefully selected companies. This approach aims to mitigate risks associated with industry-specific fluctuations. Ultimately, I aspire to achieve an annual dividend income of $75 by 2025, reflecting both a prudent investment approach and a steady progression towards my financial objectives. This has been all for today, dear investors. A pleasure, as always, to receive your great support. Remember that these videos are not investment recommendations, and it is necessary for each of you to do your own analysis and consult a financial expert if necessary. If you like the video, don't forget to subscribe, hit the like button and activate the bell so you don't miss any of my interesting videos. Thank you for watching the video, and tell me through the comments what you think my portfolio will look like next month.